Hello, financial flippers. Welcome back to another episode. If this is your first time here, welcome. Go ahead and hit the like and subscribe button so that you can stay up to date on all the awesome videos that we're going to be putting out. Today, we're going to be talking with Kyree Morris. Kyree Morris is an insurance broker, so he's able to sell from a wide variety of different companies insurance plans. So he's able to shop around for the best plan for you. And this is my hour-long conversation with him. We're going to break down what health insurance means and what it looks like and what you need to know. So enjoy. Hello, financial flippers. Good morning. It's Kyle, and your flipping coach. I don't know if that's new. I'm just trying it. Anyway, today we are going to start diving into health insurance. So there's a lot of stuff going on with jobs and with finding health insurance. And so we're going to talk to some experts. And so today is Health Insurance 101. So this is our first of two today. The second one is going to be later at 7 p.m. Eastern. We'll be talking to someone else. But today we have Kyree joining us.
What's up?
How you doing, Kyree?
I'm good, my man. How are you?
I'm doing all right.
Awesome.
So first of all, thank you so much for joining us, because I know that a lot of people really appreciate you being here.
Yeah.
But why don't you go ahead and give us a little background? Tell us about yourself and what your story is.
Absolutely, guys. So Kai Morris, super happy to be here. So thanks again to Kyle for that and Financial Flippers. I own a health insurance brokerage in downtown Orlando, right here on Lake Eola, the Morris Insurance Group. So we are a full service brokerage. I've been in the health insurance business now. This will be 5 years. It was kind of an accident on how it all happened, but stumbled into an agency one day, 5 years ago, and talked to this guy about health insurance, and he told me we could write products for every carrier, and I got involved. And years later, we've been able to, thank God, be successful in doing this. Did go to college, played some college ball, some other stuff, and just kind of found my passion doing insurance, man. So now we've been doing that. Got a team here in Central Florida, and we're having some fun trying to help people out. So
That's awesome.
yeah, man.
So you kind of briefly touched on this a little bit just now, but I want you to talk a little bit about what the difference is between an agent, an insurance agent or a captive agent, and versus what you do as an insurance broker.
Absolutely. So you'll have captive agents, guys, and the simple definition is they typically are representing one carrier or one product. So typically you'll see a captive agent that works directly for a carrier. They'll say, I'm a Blue Cross Blue Shield agent, or I'm a Humana agent, etc. With us as brokers, we have contracts with these carriers. So we write all of these carriers, but our responsibility is really for the client themselves. So we're not just selling one product. We can sell every product and kind of just make tailor-made insurance packages for clients. Now, of course, we can only work with what's available on the market, but we can represent everybody. So we're not going to just try to, hey, this is the best thing for you, because it might not be, and sometimes it is, etc. But that's the difference. We represent everybody. So
that's great. And I think there's a lot of wisdom in shopping around. So finding someone who has more options to be able to shop around is what I would advise too, and I'm sure you would as well.
Absolutely.
So I know we kind of want to start off with just, let's kind of break down what does health insurance look like right now. So if you want to kind of lead us through open enrollment and what that means, and that would be great.
Cool. So the big question always is kind of like, what does health insurance look like? What are my actual options, etc.? So option number one is typically if you are getting your insurance through a job, etc. So, you're getting it through your job, through employee benefits, or you're getting it through a spouse, etc. That's going to kind of be primarily the way a lot of people get their health insurance. The next route is going to be something called the marketplace. Now, the marketplace, guys, you've probably heard of it as about 30 different names. And I always joke and say to confuse the American people, but it's called the exchange. You've heard of it as Obamacare. You've heard of it as healthcare.gov, as FFM, the marketplace. So there's all these different names, but really what it comes down to is it's the federal marketplace for health insurance. Okay.
They are all the same thing.
They're all the same exact thing. Okay.
Great.
So what happened is, not to bore you guys, but back in the last administration, what would happen is when Obamacare administration got passed, there was a certain amount of carriers that agreed to be regulated, agreed to be on this exchange, and that's how people began to obtain health insurance. A lot of other carriers left. So that's why a lot of people will be like, what happened to Humana? What happened to Cigna? What happened to all these different carriers? They all left. And so the only ones that actually stayed initially was Florida Blue Cross Blue Shield. And then there was like a small carrier called Molina. And that was the marketplace. But now there's a few more carriers on there. Okay. So the marketplace, guys, everything on there is going to be driven by your income and your household size. So what I mean by that is they ask everybody whenever you're going to get a plan, what is your projected taxable income going to be for the calendar year that you're looking to obtain health insurance? So they'll ask you to make a projection for 2021, or if you were looking for this year, hey, what were you going to make this year? Now, what they do, then they say is how big is your household size going to be? So just a quick little insert here. They are not just looking at one person's income, even if one person is the only one looking for insurance. They are looking at the household income. So if you have even kids that are still working, you have a spouse, etc., all of that factors in. So then they look at household size. They're going to see just some little things. So you guys are the most educated people. You have to legally be married in order to be on the exchange together, and you have to claim the kids as dependents if you were trying to obtain more subsidy, okay? So on there, they'll see if you qualify for subsidy based on that. Now, the income guidelines are not super large, guys, and I can actually post for you, Kyle, the screenshot of the 2021 income guidelines into the chat today. That way, everybody can see how big their household is and then sizes, etc. Okay, so from there, they'll determine if you qualify for subsidy. Now, if you guys qualify for subsidy, premiums on the marketplace land up being really, really affordable. If you do not qualify for subsidy, the premiums on the marketplace are catastrophically high. Like there's no happy medium where it's like, okay, well, we just pay full boat. It's not too bad. Full boat is normally ridiculous. For a family, it's never normally less than 11 or 1200 bucks a month. Okay. So that's normally what that looks like. So some people say, well, what's the advantageous reasons with the marketplace, guys? The marketplace is going to cover every single pre-existing condition that you have. So the marketplace is that place. People always say, I thought health insurance had to pay for every pre-existing condition now or cover it. The marketplace does. Not a lot of private carriers, which we're going to dive into next, but the marketplace is that place. When you hear pre-existing conditions don't matter, that's the marketplace, okay? So the advantageous reason that we normally have to push a lot of clients to the marketplace is if something is going on, okay? So obviously, if you qualify for subsidy, that's where you guys are going to want to be. Or if someone has something that's chronic under maintenance that's going on, cancer, diabetes, whatever it may be, then we're going to want to make sure they're on the marketplace because there's going to be no medical questions asked. I enroll you and I'm just going to ask for ages and date of births. Okay. There's nothing else. Now, so then what's option number, 2 technically on the private side is going to be what we call private coverage. So now maybe you have somebody where your income is too high for the guidelines and you guys are relatively healthy. The private side is actually going to make a lot of sense for you. So let me just kind of break that down. A couple carriers came back to the state 3.5, 4 years ago, and they started writing private coverage. So they would write, a lot of times you'll hear the name short term. You may hear like short term medical insurance. That's a lot of times what's referenced as private coverage. You can get these plans for 1 year, 2 year, 3 years at a time, and they're through companies like United Healthcare, National General, Cigna, Aetna. A lot of them have a private division. Now, what kind of classifies them as the private side is that they can ask medical questions, guys. Every single one of these plans can ask you medical questions. Now, they're going to normally be about 40 to 50% cheaper than the marketplace if you don't get subsidy on the marketplace. So now we have this people group where it's advantageous to be on this side for the private side. But what you have to understand is that they can ask medical questions. They can't exclude pre-existing conditions. And the big one is that they can actually, none of the private carriers have to cover maternity. Okay. So one thing that I love to harp on, and Kyle knows this, is like, I'm going to sit, when I talk to my clients, I want to make sure that we talk about maternity is not covered on the private side. So if you're a younger family, maybe, and it's like, that's something that may be in the plans, then a private plan, we need to either understand that that's going to be an expense that's going to be 100% out of pocket, and just understand that it's not covered. So the private side does land up being advantageous, because if you pass that, or maybe that's not a big concern and you don't qualify for subsidy through the marketplace, then you're definitely going to want to look at private options. You're talking about, like I said, a 50 to 60%, differentiate in price. Okay. So that's the private side, then the marketplace. And then after that, guys, there's a couple things called I don't want to go too deep and like confuse anybody, but I think it would be advantageous is that there's something called Medicare. So there's a lot of Christian affiliation type things where, if you have a religious affiliation, etc., there's some health sharing companies. They are really, really affordable. But of course, there's a lot more things excluded. That's kind of the rule of thumb. If you're paying, if you're paying less, then there's going to be, guys, hey, let me, thanks.
Oh,
Sorry
hey,
about that, guy.
it's okay.
So that's how that would work. Okay. So Metasharing, and then after that, there's something called Medicaid in the state. Okay. Medicaid is a very tricky world because it has a lot to do with your income being below a certain number, sometimes being pregnant, etc. And that's kind of a whole different world. But the main, if you were looking to obtain private health insurance or health insurance, it's going to be the marketplace, or it's going to be the private side of health insurance.
Now, two questions about that's okay. People are going to be able to rewatch these videos, so all this information is going to be helpful. As far as Medicaid goes, which is the last one you talked about, have the income limitations been lifted for Medicaid?
So, and Medicaid still has not technically expanded to the state of Florida in the way that you're talking about. So,
Okay.
yeah, it's still extremely tight income limitations. The application process, it's, and I'll drop the links for everybody. You can go on there and see what it's required of it. They don't just so you guys know, they don't let brokers like do Medicaid applications or anything like that. So sometimes we're not as well versed as every little detail, but I can definitely put it on there for you.
Okay, and then my second question was about the Metasharing, because I think that probably a lot of people don't know that that's an option, but it's really attractive because, especially right now and just in general, people usually ask how much a month versus how much, which we can talk about a little bit later. But so it's really attractive being a lower cost. But I remember you saying that that's usually where you direct people as a last resort. Can you maybe go into why that would be less advantageous?
Yeah, so some of the new ones, so for instance, guys, and maybe I shouldn't say last resort because Metashare has really proven themselves. There's a company called Metashare. They're actually based out of Melbourne here in Florida, guys, and they're the biggest Christian healthcare ministries type Metasharing platform, and we have a lot of clients on them. They actually utilize a genuine billing system. So before, why it was always a little bit less advantageous, guys, was if you Metasharing, the concept was literally you would pretty much do all of the legwork. You went and got a medical bill, you then would have to go get everything, put a claim together, submit it to this, office, and then they would literally send out something to all of the patrons. And it was like, we're going to pay Kyle's medical bills this month. And then you're waiting to receive, yeah, it's a good, it's like, okay. And then there are some companies where it was so like you would actually be receiving money from different people. It's like, okay. So, sometimes if you're used to traditional insurance or coming from a corporate background, etc., it's normally not my first pitch where I'm like, hey, you want to be on this. Metashare, though, utilizes one of the biggest PPO networks now in the country, and they have a billing system. They bill them directly. So it's actually not my last resort anymore. It's just, of course, you have to meet the criteria. I try not to ever be too upfront with like, there's Christian options, and because I know everybody has a different affiliation, etc., but you do have to meet a certain criteria outside of medical where they are going to ask different religious affiliation questions. And sometimes you have to get a statement from a pastor, and there's some different things involved there. But, it does work very well. The concept is there's a bucket in the middle of the room. All of us are paying a premium. If one of us needs to do something, the money is coming back out of the bucket. So it's like a communal mindset type thing behind health insurance. So
great. From what I've read, there's just a little bit more red tape. And there's more hoops to jump through. So you have to be much more diligent and disciplined about, like you said, all that kind of paperwork and stuff like that, which is what I've read as well. So another question that we got was, if we were trying to say which one is better, lower deductible or low out-of-pocket max, what should I kind of direct my focus to? Or is there one better than the other? Or how would you approach that question?
Okay, so the way I look at it is out-of-pocket maximums are attached to every single plan. The out-of-pocket maximum is always your end destination, right? It's like, this is, if everything hit the fan this year, this is where we're going to end up, okay? So if we're looking at two plans, the way to really break it down is the deductible is just mean, if you have a lower deductible, you're just going to hit that part faster. But if your out-of-pocket max is the same in a sense, then you're still going to the same place. Then at that point, sometimes it's better to take the plan that has a lower premium. That way you can be putting some of those actual liquid dollars into savings, and you kind of maybe know if something hits the fan, then we can use that. Now, if the overall out-of-pocket max is lower and you're expecting maybe a rougher year, then always normally that's going to typically be go with the lower out-of-pocket max. So if the lower out-of-pocket max is $5,000, then, go with that one, because if you're expecting to actually hit it. But then you still have to always weigh out what the premium differences is, guys, because sometimes, and I think I've explained this, it's like sometimes
Yeah.
the difference in premium, in a sense, for a plan that has the same exact out-of-pocket maximum, you just get there quicker or slower. So sometimes lower deductibles can be tricky, because they'll say, like, here's $1,000 deductible, but your out-of-pocket max is still $8,000, and you're still paying for the majority of hospital stays, etc. But the premium, because it has $1,000 deductible, is $300, more. And then so sometimes it's like, wait, if I times that 300 out by 12, the difference between what I'm saving, it actually all balances. I'd rather save the dollars themselves in my pocket. Does that make sense?
Absolutely, absolutely. To kind of add on to this, the idea of insurance is that we're covering the big stuff, right? We don't. Staples will sell you insurance for a pen, but you don't need. That's silly. You can just replace the pen. So it's silly to spend the extra money on that.
Yeah.
But what we want to make sure that we cover is we cover the big stuff. So for me and Ashley, we were interested in having maternity care because we're open to having a family, but we also have a lot of friends who have spent a lot of time in the NICU, and we also know how expensive that can be. And so that's what we want to cover.
Yeah.
We're okay covering the smaller stuff, but we want to make sure that those that insurance is in place to cover a bigger life event should that happen.
And that's what I always try to convey. Insurance is really for the big things. So just looking at, I always try to talk about worst case scenario, and not because I'm a morbid person or anything like that, but it's just saying, if everything was to hit the fan in your life, you need to know what your ceiling is. That's what I typically focus on, because deductibles can be very almost deceiving, because when you start getting into the fine print on insurance, guys, and this is something that we can talk about later, but it's super important to understand the co-insurance breakdowns on your plans, because I have seen a lot of people get put into plans where they're like, I have a $0 deductible, but they're actually responsible for 50% of every hospital stay, up to the same out-of-pocket maximum that they would have been if they had a $5,000 deductible, and maybe they would actually save some premium dollars. So it's very important to dive into those little things to just understand, which route you're taking on insurance, and you just understand your overall exposure.
Well, we can spend a little bit of time on that now if you want to, just kind of breaking down a little bit further the co-insurance.
So remember, guys, most health insurance plans are going to have some level of co-insurance. Okay. So just to kind of break that down, your co-pays are typically for your day-to-day stuff. It's an outlined expense for going to a doctor, going to a specialist, going to get blood work, etc. Now, then you're also going to have something called your deductible. Now, your deductible is typically going to apply to the bigger things, the hospital stays, the surgeries, etc. And what the definition of that just simply is, you're responsible for that entire thing before the health insurance company even kicks in on any of the bigger things. So if you have like a surgery, you have a big, a NICU, whatever that may be, there's normally not a copay for that. Normally it's going to be, you're responsible for your deductible. And then after you meet your deductible, leads us into that third word, which is co-insurance. So typically, and you guys are probably familiar, you've heard 80-20, 70-30, 90-10, etc. So what that simply means is, once I've met my deductible, now my plan is on an 80-20. And that's going to lead us into what we were just talking about, which is your maximum out of pocket. So once you've met that $5,000 deductible, now you have 80-20 co-insurance, where you're responsible typically for a percentage of everything you do, all the big stuff, up to your max out of pocket. So for instance, let me just paint that picture. The bill is $100,000. You have a $5,000 deductible. You're going to pay the first $5,000, no questions asked. That's just your responsibility. There's $95,000 left on a bill. Now the insurance company, you have an 80-20 plan with $10,000 as your max out of pocket. The insurance company is going to pay 80% of that bill, and you're going to be responsible for 20%, up to $10,000, and that's including your deductible. So you have another $5,000 of co-insurance that you're responsible for, that you'll be billed at a 20% rate to get to. And then if you hit that, you're done for the entire year. Then, they pay everything at 100%. Is that a okay definition to kind of explain?
Absolutely. That? And that's an important number for people to know. Not just the, hey, what am I paying every month? What's going to be like the worst case scenario? I always joke about, there's people that drink the Kool-Aid, and there's people that refuse the Kool-Aid, and then there's people in the middle like you and me that like to spike the Kool-Aid, to be compassionate, but also we have to be realistic with what that situation would look like. And so having that number in mind of what is the worst case scenario, we're responsible for $10,000. We know we can make that. We know what that number is. And then you can make a decision based on that.
That's the best thing to do with insurance is always talk max out of pockets. Don't let anybody bamboozle you by just saying a deductible, guys, because that just means that's what you're responsible first. And then we're going to hit you with the rest. So
Right. And the rest of the stuff is what's important. That's why insurance is there.
yeah, that's so understanding worst case, if I get cancer, what am I responsible for? Okay, cool, 10 grand, like you said, 8 grand, etc. Okay. So
Mm-hmm.
that's typically yep.
So, so one of our other questions was asking about this is kind of changing gears just a little bit, but we're covering a lot of different stuff during this. For somebody starting a business, how to acquire health insurance specifically for starting that business with the idea and the plan that I'm going to build out a team eventually.
Okay.
Yes.
So I'm gonna touch on group insurance, and I'm gonna touch on a couple of things that I think would be advantageous if any small business owner watches this. So
Okay.
typically, the smallest number of employees that any small group carrier is going to want to touch is 2 employees. Okay. Now, so you and someone else, whatever that may be. Okay. Now, I'm going to just be as transparent as possible. We write a lot of small group insurance. It doesn't really start becoming financially like it's not really incentivized until you're after 4 to 5 employees, because for them, having a group on 2 people is normally not the best thing in the insurance company's interest. They would rather you go individual than them to put a full group on you. Okay. But you can put that in place and then continue to add on after that. Now, let's say you have some employees, guys, simple rules with group insurance. Okay. For every small business owner in here, you're going to be responsible for 50% of that employee's premium. No questions asked. State of Florida law. Okay. If you have an employee, you're not responsible for 50% of their family. You're responsible for 50% of them. All right. That's the bare minimum. If you have, let's say, 10 employees, whatever it may be, every small group in the state of Florida is going to require you that 50% of the group takes the insurance in order for you to put a group in place. Okay. So if you're watching this and maybe you have 4 or 5 employees, half of them have to be willing to take the group insurance for a group company to start a group for you. Okay. So that is just kind of rule of thumb. So, I mean, some other little things with group, you can, under 50, it's completely optional. Over 50 is where the state mandates you have to offer benefits, etc. But normally it's more advantageous to go individual until you are at about 3 to 4 employees. And then we can start looking at group health insurance and then going from there.
And the 3 and 4, are you saying in addition to myself as the business owner?
Yeah. You're going to want to have a 4-man group in order for it to start making sense for you financially. Typically, 1 to 2 people, you're going to be paying just as much, if not more, on a group policy than you would on the individual, and typically more because group policies are normally pretty good too.
Gotcha.
Yeah.
So I kind of want to just take a step back, and for people who this is the first time they've ever had to even think about health insurance, they don't know anything about health insurance. Are there pieces of advice that you would say, look out for these, or these are questions to ask? Obviously, I would recommend that somebody talk to someone like you who actually educates as you walk through somebody through this process. But for people who are a little overwhelmed right now with even starting to look, let's talk to them.
Some big things, guys, and I don't ever want to make it seem like I'm talking bad about any companies or anything like that. But unfortunately, just in the insurance space, there's a lot of call center atmospheres and environments, etc., where they're just selling there's like health products and they're not major medical health insurance. So one of the big questions, if you're in a sense a beginner into shopping for health insurance, a very direct question you want to ask whoever you're speaking to, whether that's a call center rep, if it's me, anybody, is this major medical insurance? And then that's just that, make them answer that question, because a lot of times there are products that are called indemnity products. There are hospital plans, et cetera, that people will frame. And to be honest with you, I'll talk about my own industry. You get paid a lot of money to sell these products. There's a lot of money in it. So if you can frame it a certain way, certain people, they just go about and they sell those things, and it can completely mislead the consumer. So one of the big questions you want to ask is this major medical insurance? Okay. Another question you want to ask is, how much will this policy pay out lifetime maximum? That's a every broker agent should be able to answer that question with zero hesitation. How much is this policy going to pay out if Because there are a lot of guys, and I'm not trying to expose my industry, but I also think it's beneficial for you to know there's a lot of policies out there where they're selling it to you and the policy only pays up to 100 grand. There's certain policies where after you meet your low deductible and people on the phone are like, oh my God, honey, like he told me $100 for our whole family for amazing PPO insurance. And it's like in the fine print, their lifetime ceiling is 50 grand. So this company sold you a policy that's going to pay. So you want to make sure you're out of pocket, your max out, like what they'll pay is in the millions. It needs to be above $1 million, guys. My best friend this year, he had a massive head injury. We had to have him shipped back from Colorado, and the bill was $600,000. So that's someone who's, I'm in my late 20s. Like like someone similar age, not health conditions, nothing. Just having something like that happen was a $600,000 bill, and it would have easily been into $1 million one more week in the hospital. Okay. So that's why, guys, thinking worst case scenario, if you're a beginner in the insurance space, ask how much is this policy going to pay? And then also you want to talk about your network. A lot of these plans, they'll say stuff like it's a PPO, it's an HMO. Ask what network they're utilizing. There's a few key networks in the state of Florida. A lot of private plans actually utilize one of the big ones. You can just ask, hey, what network? Is there a way to search my doctors? You want to confirm that people are actually going to take the insurance that they're writing on you. I see it every day. People buy a policy, then they call me like, whoever, they don't even know who this is. There's no way to bill them. And we're going through it. And it's like, yeah, you don't even have health insurance, my man. You have a hospital plan, like with a critical rider. And the thing is, guys, and I'm talking about my own people, like it's very easy to word things a certain way and make people feel warm and fuzzy about the plan that they just sold them. Oh my God, babe, it's a $0 deductible. Everything's free in the plan. It's like, guys, let's be honest. If it sounds too good to be true, it is.
Right.
That's it. Because insurance, I'm going to say something that sounds bad. Insurance is a hot mess right now, and it has been for the last 6 years in our country, guys. So like, if anything sounds too good to be true, I guarantee you it is. Okay. So that is just something to really, really think about. Max out of pockets, network recognition, making sure that it is major medical health insurance. Okay. And then if you have a pre-existing condition, anything, just say it. People know. With me, I'm like, be blunt, be ugly with me. Tell me what's going on. You don't have to be overly invasive, but you want to make sure, is this going to be covered? Because on private plans, guys, a lot of mental health things are excluded. So if that's something that you need, you want to make sure that you can just ask, hey, is this covered? Ask the specific questions, because a lot of these plans and a lot of the guys selling them, they know certain things are excluded. So they're steering away from even trying to get anywhere near that. Okay. So make sure you ask things that you're even thinking about that could come up. If you have a husband that might need a knee surgery, ask, because there are certain surgeries that may be excluded, and that is in the fine print. So I think the biggest piece of advice I would give is just ask as many questions as possible, even if the agent is, and if the agent doesn't want to answer them, you probably don't want to work with them. Like, I don't mean to be rude, but if they're like, I don't want to answer questions, then I mean, that's a good chance you might
that should be a red flag if this person is they work for you, and you work for your clients. So it's not wrong to be asking, even if they're the expert in that. It's not wrong to ask you questions.
Correct.
So what I want to do now is I just want to let people know, anyone that's watching, if you have questions, go ahead and drop those. We're going to get to the rest of these questions while Kyree's still with us. So if you have them, go ahead and drop them in the comments. But otherwise, we're going to go ahead and keep going. This first question was, why would anyone choose an agent versus a broker?
So sometimes, for instance, like I have some good buddies that work in-house at like Florida Blue and et cetera. And they're incredible agents. They've just worked there. Florida Blue is still the biggest insurance company in the state. So a lot of times they do have a good product, et cetera. So sometimes they're just working with somebody that's always worked well with them, and they actually have a product that really works. So they just keep working with that agent. But, in my honest opinion, I think anytime you're shopping something, then that's when you would want to have a broker. If you're confident in the product you have, and maybe you've had it for years, et cetera, then working with an agent is fine. I think really in the senior space, working with an agent is good too. If you're on Medicare, I don't know if anybody in this group would be, but if you're a senior then working with an agent is often okay as well, because they are going to still do what's in the best interest for you. There's a lot of, red tape and stuff, but I think working with a broker always makes sense as long as you trust them, because you can look at everything. I have every contract. So, and
Right.
whoever broker you speak to. So, yeah.
Right. And I think that's so important.
Yeah.
If there was something that that you would say is the most important thing to cover, what would you say is the most important thing to cover?
Like in an insurance policy?
Yeah,
Or
what's like the one thing that I want to make sure is always covered?
I mean, my biggest thing that always takes sleep away from me is if anybody has a pre-existing condition.
Mhm.
Anything that's going on. The worst call that you can get is, "Hey Kai, I got a medical bill and it's not covered because the policy you sold me, you told me it would be, or etc." So you always just want to make sure that, if you have something that's going on, guys, even though it may be uncomfortable and you don't want to mess your premium up or something by telling the broker or agent the truth, guys, let me just tell you, you can look me up. Like, you just tell us the truth, nothing's going to affect your premium. Like, I can't make your premium go up because you have a medical condition. So just tell me that, like, tell whoever you're speaking to the truth, because if a medical bill does stem from it, I guarantee you the insurance company will find a way to deny it. They're bigger than you. They're like that. That's just what they do, and it sucks. And I
Right.
watch it, and so it's better to be honest and have a record that you even said it. It's good
Mm.
to email and be like, "Hey, I asked the guy that represents you guys specifically, is this covered?" Because those are normally where the incidents happen. I've never really had any issues where we had someone who was completely healthy, 100%. Normally, everything works fine.
Mhm.
And then the only other thing would be the max. Excuse me, guys. I'm so sorry. The
It's
maximums.
okay.
The maximums are a big deal, because I think I have seen people that get these policies and they thought $250,000 of coverage was enough. And for the average person, yeah, it is, because most of us probably aren't going to go it. That's just how it goes. But the one time, guys, it's the one time. It's the accident that you got in and they didn't have help. They didn't have car insurance, or they didn't have, and now you're in the hospital and you're like that bill, guys. I'm telling you. And then probably the last thing, Kyle, I know you said one thing and here's 12, but
Hey, that's okay.
really, really, really just making sure that you're not in what we call an indemnity product. A lot of people, these people call all day on the phone. I know them, they call centers and they're selling these products. And the first thing they say is it's a $0 deductible, and it's the best thing on earth, right? It's all these benefits. Guys, just take a step back anytime it sounds too good and just do some research, because a lot of these plans are called indemnity plans. And what they do, guys, is they outline how much they're going to pay towards a certain categorized thing. So for instance, they'll put in the policy, if that person breaks their arm, we'll pay $5,000 for that. $0 deductible, but we'll pay out $5,000 for it. Guys, if you break your arm and your kid's in the hospital for a week, I can personally assure you, I have bills on my desk right now. It's going to be more than $5,000. So people will be like, well, it sounds like a lot of coverage, because sales guys can make everything sound good at some point, right? Timeshare sounds good too. I'm playing. I'm joking. But it's like,
Don't do timeshares.
I'm sorry. But it's like, I can promise you, once one or two things, maybe a straight broken arm and in and out the emergency room is $5,000. But if anything else is wrong, it's so easy to hit 20 and then 50 and then 100 for a week or 2 week long hospital stay. Then you're like, what happens to the rest of the money that they didn't pay? Well, that belongs to you. And so
Right.
that's the problem. So then people are like, my whole family, I'm paying $250 a month. Can you beat that? I'd rather be the guy that's just like, no, we can't. Because if you want the quality, that's just kind of how it is right now. So just beware of those
Right.
things, guys.
Well, that's what we were saying. If it's just because it's less out of pocket a month doesn't necessarily mean that it's actually covering what it is that you're paying for it to cover. And as part of a really good financial plan, you have to play defense, and that's for those $600,000 bills that you never saw coming.
So
And so you have to be ready for stuff like that, and that's part of having a solid financial plan.
I think listening,
Okay.
yeah.
Oh, sorry. Go
Oh,
ahead.
okay. No, I was just listen to the benefits, not just the premium sometimes, just
Yeah.
listen. Yep.
Yeah, I think that's so important. All right, let's go ahead and dive into some questions. So the first one, can you please talk about strategies for individuals with pre-existing conditions with high cost recurring prescriptions, such as Humira, Remicade, etc.? Before we go into this question, because you touched on it a little bit, but I want people to also know what is considered a pre-existing condition, because I feel like it's such a gray area for terms.
Yeah.
So could you give some like spotlight on a couple of those pre-existing conditions and then go into this question?
Got you. So typically, guys, what I like to call, let me start by what a pre-existing condition is technically not normally. Okay, like going to the hospital and your kid had an injury, or you got the flu last year and now you're fine. Those are not things that insurance companies, especially on the private side, are really considering a pre-existing condition. Most of them don't even consider blood pressure and cholesterol anymore something that's going to really be like, oh, we don't want to insure you. After 2020, we all have high blood pressure. So, that's kind of literally. But normally the definition is something that's been under routine care, keyword routine, guys, routine care within the last 2 years. Now, don't just take that as the legal definition. I'm telling you what some of the bigger carriers outline as their definition. I think a pre-existing kind of has a broader definition, but what I like to tell my clients is if you know what's going on, consider it a pre-existing condition. Because I can try to get into the legality and be like, well, technically you ain't been to the doctor in 2.1 years, but it's like if you had a heart stent put in and then something happens, they're going to try to correlate the two on the private side. Okay. So that's just kind of one of the ways to think about it with pre-existing conditions, is something that's been under maintenance, something that you're constantly under maintenance for. Diabetes, guys, that's like one of the bigger ones. Of course, any massive thing, cancer, if you've had a heart attack or stroke within the last 2 to 5 years, that's normally something that they're going to be concerned about. And then they will ask medications. A lot, about 80% of generics fly through. It's just some of the bigger ones. And I actually see a couple here on this question, which we'll get into in a second. But some of those things, and that's just kind of how I tell people to approach it, is just think that it's probably not going to be covered if it's something that's been going on. But yeah, I hope that kind of adds a little bit of clarity to that, man.
Yeah, definitely. And then we didn't touch on this, and we're getting to the question, I promise. But another important thing to ask about, which you made sure to ask me and Ashley about, was what medications are you taking?
Yeah.
Because we also want to make sure that whatever plan you're on, you know whether or not those medications are able to be covered as well.
Yeah, it's huge, guys. You have to make sure, because a lot of these plans, they might, they have different formularies, and they'll tell you what's covered, what's not covered. And I mean, this kind of leads right in, so I'm just going to do it, Kyle.
Yep.
When you talk about high cost recurring prescriptions, now I'm going to say something, just to be honest, medical insurance outside of the group space, the pharmacy world is pretty bad just in general. No matter if I put you on Blue Cross, United, except it's all pretty you'll have a copay for generic medications. What we have gotten really good at, guys, and this is just a little life hack for you, always go direct to whoever the manufacturer is of that medication. Okay. So for instance, if Pfizer is the person who makes the med, normally if you go to Pfizer's site and you just put in the fact that you have insurance and you're having a hard time paying for that medication, they'll typically issue you a 3 to 6 month coupon for the medication where you can pay like 15 to 20 bucks a month for it. Okay. They have billions in funding to do that. It exists for like everybody. Most people just don't realize that it exists. So whatever the drug is, always figure out. The other life hack, CanadaDrugstore.com. Okay. Completely legal. Canada Drugstore, guys, another way to get certain medications at an extremely good price. And then our favorite around here is GoodRx. If anybody's familiar with GoodRx, it's incredible. It's an app. You can just put it right on your phone. Whenever you go to pick up your medications, you show them the GoodRx thing, they scan it, and they let you know whatever the best available rate is that day. GoodRx crushes most formularies most days of the week, even if you have a copay. So those are some little life hacks with getting meds for a really good price, even if they are high cost on your insurance formulary. Okay.
Great.
Yep.
So that was in talking about this high cost prescription stuff, and I can totally attest to. There was I had really bad allergies in one of my eyes, and I was prescribed Bepreve, which is like this $900. It's not that much. It's like $400 bottle of eye drops. And going straight to the site, there was a coupon, and I think it was $35 for a supply.
Almost every time.
Yeah. All right, here's our next question. What's the best type of plan for single, unmarried, independent contractor with no pre-existing conditions, no medications, no kids?
Cool. So it's going to come down. You can go either way, whoever this is. The big thing, just to touch back on point number one of today, it's going to be, do you qualify for income assistance? Because at this point, it's just going to be if I can get you a plan for extremely cheap through the marketplace based on what your income is. If you're like, hey, now Kai, self-employed income super high, then private all day long. You're the perfect private candidate. So you go private insurance and you're good to go for, I don't know how old this person is, so I won't throw out a number, but it'll be cheaper than the marketplace. Yep. So the first thing we always look at though is income. So I'll just kind of, hey, if you're making whatever the income guidelines is, I may be able to get your plan subsidized and you're paying, I know this sounds wild, but you pay $5 a month for health insurance for an incredible plan. So I'll try to go that route first and hook you up. And then, if it's like, no, my income's high, then we go to one of the private carriers, United, Cigna, Aetna, and we put you on one of those. So,
which are still relatively low. Considering it shouldn't be something that's so daunting. They're still relatively low.
Insurance premium, unmarried, independent, no medication, no kids. I mean, I don't know how old this person is, so I don't want to throw out a number, but it's a good price. It won't kill you on the private side.
Is there an age where you feel like it's probably not wise
to
like a threshold
go on the private?
Yeah, like one or the other, like, oh, it's better to aim more at the marketplace.
Normally, to be honest with you, and it's like a catch-22, right? The older you get, the more health conditions you typically have. So if you're looking to go private at 62, I'm normally like, darn, because 9 times out of 10 on the 5 medical questions I'm about to ask you, you're probably got one that's like, yeah, that's going on. Okay. So then the marketplace becomes the only option. But if you don't qualify, this is the toughest one. If you don't qualify for marketplace income assistance at age 62, I don't know when the meeting was where they did, talked about pricing or et cetera, but you're talking about like an $800 entry plan for being in your like late 50s, early 60s, trying to get health insurance without subsidy, just so it'll cover your pre-existing conditions. So,
right.
That's kind of, does that make sense? It's like a catch-22. So it's like, I would prefer the older you get to put you on the more comprehensive coverage that I know everything's going to be covered. But then sometimes it's like, oops, well, you make too much money. And so it's like, here we come back to maybe the private side, or you're paying full boat on the public side. So that's kind of the situation there.
Gotcha. Now this person just commented that they're under 35.
Okay. So I still don't want to, but under 300. Say that.
Which is still pretty great.
Yeah. And we can play.
Okay.
Yeah.
Let's move on to the next question. Are there a lot of plans that are less than a year commitment? I'm looking into a 6-month commitment, temporary insurance. And I guess another one that we can talk about in this is like if there's a gap. So say like somebody has a gap between employment of 2 weeks, or what catastrophic insurance is. I think that could all kind of fall into this question.
This is actually, this is how short-term insurance got started. So yes, to answer your question, we can do policies for 30 days, guys. We can do as low as 30 days. So you can do a 30-day policy and then every month after that. So we can do 6 months, et cetera. It'll give you a real good price break if you do a 6-month policy too. Now, of course, the only thing with a 6-month is that if we re-up it, your deductible does reset because it's a whole new policy. But yeah, can definitely do a 6-month thing. I have commitment issues too. So that was just
Great.
a joke. But
it's still early. What is the difference between that and like catastrophic insurance?
So it honestly, guys, people have categorized stuff and given it names. So people think that there's actually like a product that's named. It's just that people have like nicknamed it almost. Guys, typically catastrophic is just, it's more attached to the deductible than anything. So like if someone called me, they're like, hi, I want catastrophic. I don't care about day to day. I don't care about anything. I could literally put you in a plan that has a $10, $15, $25,000 deductible now. Like if you're like, I just want a ceiling, I'm out here living, in case I get hit by a bus, that's the only thing I care about, then we can do that. And that's normally what we would define as catastrophic. Catastrophic is normally not going to be anything under a $10,000 deductible. We kind of just consider that regular health insurance. But anything where it's like, we do have plans now that have $25,000 deductibles. You're just responsible for the first 25 grand. If that's something that interests you, it is extremely cheap and you can do it. And there are people like that though, where they're just like, I just want a $15,000 ceiling. I don't care what happens. Then that's typically what we would define as catastrophic, guys.
Gotcha.
Yep.
And somebody wanted me to tell you that it was definitely a good joke.
I needed the validation. I was like, God, I'm losing my edge.
You got it. Okay. Next question. When is Cobra a good option for individuals?
Cool. So guys, just so you know, Cobra is sometimes it's a good option, and where it's normally a good option is that situation we just talked about, Kyle. You're 62, you make too much money, and now you want to go, now you're calling me and you have a health condition. You're like, hi, I got diabetes, I'm 62, and out of my retirement now I'm drawing, 80 grand a year. The marketplace is going to be no subsidy, so they're probably running $1,000 for a semi-decent plan, and maybe his Cobra is 600 or her Cobra is 600, something like that. That's often the time where Cobra makes sense. 9 times out of 10, Cobra doesn't make sense, and here's why. Whenever you leave whenever you leave a job, I don't know why I said God in my name. Whenever you leave a job, guys, they typically roll out Cobra. How Cobra works is it's 102% of whatever your premium was. So the average employee is paying a minimum of, or a maximum, right, of 50% of their plan. Some, they're not paying anything, so they don't even know, they're used to, their company pays 80%, whatever it may be. So what happens is when you leave, how Cobra works is you're going to now be responsible for everything that the employer was paying and what you were paying. So let's say you had an $800 plan that you were paying $100 a month for because you didn't realize it. Now you're going to get that. Then they charge you a 2% rollout fee. That's what Cobra charges as their fee to roll out the same plan from your company. So normally your premium is catastrophic when you're leaving compared to what you're paying. And I see it every day. People are like, I pay $140 bi-weekly. Now for my family, it's $1,300. Yeah, there's the full premium. There it is. So typically Cobra doesn't make sense because you can normally get on the marketplace for even cheaper than Cobra. So Cobra is a very, very rare one. To kind of just sum it up, typically where Cobra makes sense is we have something going on that's medical and our income is just way too high. That's when you typically land up like, okay, Cobra actually might make sense for you. It actually would be cheaper than me trying to put you on the marketplace because maybe you have a family or something like that, or you're higher up in age. I have never seen anybody under 50 leave their job and keep their Cobra because of how expensive it typically is. I hope that all makes sense, but that's how that works.
Which is why it's always good to talk to somebody like yourself to just say, hey, what are the other options? What do I have to pick from? And then somebody who can actually talk you through, okay, this is what your max out of pockets are, and then you can ask your questions like we were talking about.
Absolutely.
Talk about earlier. So this is the looks like the last question we have, unless another one pops up. Is there a minimum wage for the marketplace? What if you're unemployed?
13 grand. So if you are one person, a single household, you have to make a minimum of $13,000 a year in order to qualify for subsidy on the marketplace. The most you can make is 49,000. Okay. It's like 49,246 or something this year, but roughly 50 grand. Okay. So kind of keep in your head, if I'm a single person, 1350 is like the most you can make and get subsidy. If you are unemployed, this is just to keep in mind, unemployment does count as income on the marketplace. Okay. So if you are obviously right now and probably going into next year, that's what we've been dealing with a lot of, is where people's sole income is unemployment. So that will actually be beneficial for you because you will qualify for a lot of subsidy based on unemployment income. This is where it gets funky. If your income is right below that 13,000, if you tell me you're going to make $12,999, you do not qualify for subsidy. And then you also don't qualify for Medicaid because there's a gap. It's so weird. There's a gap. So there's a floor on the marketplace, and then there's a window between the Medicaid ceiling. So there's like a window of, well, what do I do? And that's where it's a really weird situation. But yep, there's the minimum. So not technically a minimum wage like per hour, but there's a minimum annual that you have to make as one individual to qualify. And remember, guys, the higher you get in income, the lower amount you get. So the closer you are to teetering that line of like 50 grand, I have people that are qualifying for like $6 a month in subsidy. It ain't doing much for them because they're right on that line. So the sweet spot is typically the lower end of the subsidy. That's where you're getting a lot. Or you have a spouse that's going to be on the coverage, dependents, etc. Okay.
Do you typically find it better for for young families to join together, or is it better to go off on individuals for the two of them? What do you typically find is better?
Together, if we're going any route together, you get a price break on the private side together, but on the marketplace, guys, the more people on your plan, the more subsidy you get. So I've had
Right.
clients, for instance, for years, they were like, I'm just going to insure myself because it's going to be too expensive if I add my spouse. So on the marketplace, we've just had them, and it's like finally, had that conversation where I'm like, actually, if you put him on, he'd be insured, and your premium would go. I took someone's premium yesterday from 148 to 98 cents this year. Like that's the type of like because you added someone, and that's what's interesting. So you qualify for like double the amount of subsidy when you add people. So the more people you add, as long as the income doesn't catastrophically go up, if the income is 60 grand and it's just you on the plan instead of you and your husband, get him on that plan and your premium will probably go down, well, a really good amount. So
Right.
that's kind of how it works. So rule of thumb, guys, when the marketplace is around, as it's around right now, the more people you got that are legally, dependent spouses, everybody together, you get a lot more help. And then for kids, I don't know if I'll just address it. You didn't ask me, but the
Yeah,
other
please.
kids is something called kid care, guys. So sometimes people wonder like, well, I get insurance through my job because a lot of employers will pay for your insurance at 100%. Like they'll be like, your insurance is free or your insurance is super duper cheap. And if you add one person, sorry, my camera sits on this side of my screen and the screen is weird. So that's why I've been looking like that. I'm
That's
sorry.
okay.
But if you add one person onto that plan, so for instance, you'll see someone that works at like a Disney or something, and, maybe not Disney, but just another company. And they're like, hey, if I add my spouse, it goes to $800 a month. For just me, it's free. See it every day. So then at that point is where, it kind of gets a little bit, on the group side, it can get a little bit weird. So kid care is designed where you can get your kids insurance and they give them like a sliding scale based on the parent's income. And it's really, really good benefits. So that's a situation you might find yourself in where maybe you and your spouse get your insurance for free through your corporations. And you're like, I don't know how to just insure my kids. We can insure them too on the private side and stuff, but it's normally going to be more expensive. So go through kid care through the state. And sometimes, I got people paying $20 a month, for their kids to be fully insured. So just little things for you guys so that you can fully be prepared for whatever 21 brings us,
And then as a final question, this is kind of going off of the last one that was asked about being unemployed, because I know a lot of people watching may be in that same situation.
Yep.
Is there any advice that you have for people that have a really hard time trying to project their household income? Because again, it's the household's income.
Yeah.
For next year and trying to fall into that subsidy guideline between that 13 and that 49. And if they go over that limit, what are the repercussions for that?
So I'll touch everything, and that's how we can call it. So
yep.
The first thing on the income I'm projecting, kind of two solutions here. The first thing I try to do, and I deal with, as Kyle knows, I deal with so many self-employed people. So the big thing is maybe looking at the previous year. Sometimes I tell people, well, what was your tax return last year? Is there kind of an average that you fall on? Now, even that sometimes is difficult because I got people that their business is right on the verge of blowing. They signed a new contract, like, well, what I did this year is going to be completely irrelevant for what's about to happen. So what I'll typically do is I will pull out my chart with, this is where you can be, okay, and still qualify for subsidy. And if they feel like they're going to be towards the higher end, almost like a gut feeling, I'm like, do you feel like you're going to be here? Then that's where I will say, let's just either go private right then, or we can do a quarterly eval. So we can update income. Like you can update and take away income as the year is going. Like the marketplace is not something where you make a projection and you can't touch it. I have people that are like, hey, I'm going to make 50 grand. And then what I'll do is every 3 months we do a call, and I'm like, how'd the first 3 months look? And it's like, yeah, we're on target to blow that out the water. So then either at that point, we're like, all right, let's either get off the marketplace or let's adjust your subsidy so that you're paying the correct amount. Okay. Here's the issue. If you go over in subsidy, guys, if you go over your income, so, and I don't mean to scare you, but I think that it just so that you do know how serious the government takes this. So if you go over on income, you project 60 grand and the subsidy limit is like 61, let's say, and you land up making $62,000. Every dime of subsidy they gave you, they're going to take back on your taxes. So you'll owe that as a tax bill. Okay. I have had clients, this is not, and I'm not trying to point blame or anything, but I've been doing this for a while. You have people that tell you an income that lands up being completely off. And then they owe 16 grand at the end of the year in taxes. And that can be a problem. Not can be, that is, right? That's a problem.
Sure.
So what you want to do is always be more conservative. Try not to be super liberal with it. Think if you had a good year, think if things go well, etc. But if you're self-employed, the big, magical key here is, and I'm not going to tell you how to run your business. I'm sure there's other CPAs or whatever. Talk to your CPA. But the trick, if you want to be on the marketplace and you want to get subsidy, and this is a life hack, is just pay yourself a salary from your corporation and make it the same thing every single year. Like that's the trick for self-employed people. I've got people that make 10 million a year and they get subsidy. So it's pay yourself a salary from your corp. Life hack. I didn't say it off the record, but if you're self-employed, that's the key. That's the only way you'll be able to project your income. Because other than that, nobody knows. So
that's right. And a lot of people in here are like that.
Yep.
Well, thank you so much for sharing all of this. And I know that there's other links that you said you're going to drop. And thank you for being in the group. And how can people get a hold of you that are here in Florida that need a little bit of help and guidance?
Absolutely. So we're big. You can visit our website. So it's themorrisInsuranceGroup.com. I also, Kyree.com is the same. They take you to the same spot. So you do both of those. You can book an appointment. You can see everything that we do right there, see all of our reviews, etc. And then Facebook is a big one. I'll drop my number in the chat stuff too, if you want to do that. And then we also, if you just want to book an appointment, you can visit our Calendly. It's just Kyree. If you Google Kyree Insurance Guy, it'll be the first thing that pops up. So you can book an appointment and you'll actually pop right on my calendar. You won't speak to any of my guys. You just speak to me. And that's the easiest way, guys. And so, yeah.
Awesome. Well, thank you. Thank you. And I know on behalf of the group and everyone who watches this in the future, thank you so much for your time. And we'll be seeing you around.
Absolutely, guys. Y'all have an incredible day, okay?
All right. See you guys.
Bye.
I hope you enjoyed my conversation with Kyree. There's tons and tons of information in that video, so I hope you found it valuable. If you did, please go ahead and hit that like and subscribe button. If you're interested in contacting Kyree, his information is in the description below. Otherwise, I hope you have a fantastic day, live a great story, and we'll see you next time.